Well, tell us what you do talk to leaders and how are they managing through like the U.S. war in Iran, or what are they saying to you? What's top of mind?
Yeah, I think the challenge is that this is not a black or white situation. We really have our strategic tools and playbooks are very much geared towards good times and bad times. Like, are we in an upturn? Are we in a downturn? And it sounds silly, but actually downturns are easier environments for executives to grow through. There's very standard playbooks that work. They know what to do. Uncertainty is much more challenging, right? And that's why we're seeing so much unease and hesitation right now.
Is this a downturn?
See, I don't think it is. And I think that's the challenge. Our brains are framed to see things that we can't explain, and especially that we can't predict, as negative. We can't really help it. And if you think about even how we talk to each other about uncertainty, we tend to always frame it as something bad. You know, we're asking each other as leaders, how are you handling uncertainty or dealing with uncertainty or managing uncertainty? We always frame our brains that the unknown is negative or bad, but uncertainty can actually be an amazing time to grow a company, and for many, many reasons, but we need to stop framing the unknown as something that's bad. So if you want me to, I could make a very bear case right now. The bears have plenty of data to make a very bear case, but you know, the bulls have some pretty good data too. The challenge with data right now is we can't build linear models of what's going to happen next. So tell me the story you want me to tell, and I can make the data somehow tell you that story.
But that's interesting because, you know, we were kidding and talking before, you know, that before the war, we were constantly having conversations around AI. And I think you mentioned stagflation, like we were starting to look at that, lower growth in a higher interest rate or a higher inflationary environment. So in terms of what is the fundamentals if you back out the war, or is that even crazy to do anymore because things are going to be longer term impacted as a result of this war?
The challenge with any prediction right now is it comes down to the duration and the devastation caused by the war. So when we went into this, there were many who believed it would be a couple of weeks. Right. Anyone I work with, executives in energy or based in the Middle East, never thought it would be a couple of weeks. So most knew this would be 6 weeks, maybe a couple of months, which is looking, unfortunately, like that's what we're going to see. So if the duration is relatively short and the devastation to energy and asset fields there is relatively light, then we could see through this. And I think that's what the Fed is telling us in the last meeting. And that's what many executives are doing right now. But you are forced now to build a model for the other case where the duration is several months to until the end of the year and devastation to energy assets is much higher. Then we have this, what we call this negative doom loop, right? Is if consumers are more uneasy, which they are during a period of a war, and we have consumer sentiment, we know that. That means foot traffic goes down, right? That means we need to change things that we're doing across all the spaces that affect consumer goods. Then, of course, energy prices go into inflation goes up, but I'm more uneasy about my job because of a combination of AI and economic uncertainty. So all of these things start fueling each other, and then it becomes a very difficult job for the Fed to help us solve.
$4.06 a gallon, almost $4.07 a gallon. That's the latest from AAA. It's the highest going back to August of 2022.
And the math is quite, if you want to do the simple math there, if we stay above $4 a gallon for the rest of the year, that's about an extra $1,000 tax on the average consumer. Now,
for the year?
For the year.
I would be shocked if we did stay above $4 a gallon.
Me too. But it's, even if the war ends this weekend, it will be a couple of months before we see oil come back down to that $60 target. There are a lot of reasons why it was there before. And so things don't adjust automatically. So again, even if we have a couple more days, which it doesn't look like it will, we're talking a couple of months.
Do you care about data points or the economic data points that continue to come at us? Do leaders, because you got U.S. manufacturing activity expanded in March by the most since 2022. U.S. retail sales rebounded by more than forecast in February, a broad advance. Consumers stepping up spending after a slow start to the year. Read on private payrolls, U.S. companies added more jobs than expected last month, suggesting the labor market may be stabilizing. We just have about 40 seconds left. I mean, that's real data. Do we trust it? Do we believe it?
We trust all of the data, but we need to separate the headline from the storyline. We need to separate the K-shaped economy, which consumers are spending, which ones are not, what type of manufacturing sectors. And our job is to say, this is the headline, but this is a storyline that matters to me. These are the test and learns, what we call these feeding learning loops that I need in the market. So that's what leaders need to do. Nothing can build a linear model. Not one data point is going to tell you a story. We have to build a storyline that matters for you.